Hi there everyone, good morning and welcome to this edition of The Market. I'm Avan Dabash, with me is Nikunj Dalmia. Well, as we're stepping into a brand new week, it would be interesting to sum up the week gone by and the kind of action that we witnessed on Dalal Street. And yes, under pressure is how the week gone by was. We wrapped up the trading session at around 19,310 and it was a lot of touch and go around the 19,300 mark. The broader markets as well, pretty much in tandem with the frontliners. So it was a volatile session to say the least. And this discerning factor is the fact that the IT heavyweights, that's what really led the decline. So across the board, names like TCS, Infi, Tech Mahindra, HCL Technologies, across the board, there was selling pressure that was witnessed. So it was one of the longest losing weekly declines that we've witnessed, the longest losing streak since the 4th of May 2022, and ditto for the Nifty Bank. So Nikunj, clearly volatility is the name of the game. It's been the Nifty Bank Index as well as the Frontline Index that's felt the heat.
So, if you have to look at the directional move here, Avan, the direction move in the market is that the grind continues. The grind continues while we are not in any kind of an, pronounced trend. This is the fourth weekly decline, almost a month now, for the Nifty and for the Bank Nifty. Let's pause here. And if you look at what the Bank Nifty has done and what Nifty has done, along with the small and the mid cap index, which is how much are we off from the recent high, the Bank Nifty clearly is, I won't use the word downtrend, but is leading the decline. And then the mid and then it's Nifty followed by the mid and the small cap index. So while Nifty is getting jammed, the broader market has not seen that kind of a damaging cut, so to speak, which in a sense is important for us to point out. Now, what may happen this week? To be very frank and honest, the graphics are slightly lazy today, they're just not changing. To be very honest, now that's the setup which I was just talking about, what happened last week in terms of the market setup. So that I think is very, very crucial for us to establish that we are in a slow grind. The slow grind is a function of what is happening to Bank Nifty and how the picture is moving. The small and the mid cap stocks have marginally outperformed. But if the global cues deteriorate and FI selling accelerate, then we could be in for some more selling, and what is looking like a slow grind could actually become like a pronounced trend.
Okay, a slow grind could become a pronounced trend, and I just want to quickly get in a view as to how the global markets as well shaped up. Well, you did see a mild gain coming in for the Dow Jones, the S&P 500 and the Nasdaq absolutely flattish with a positive bias, but for the week gone by, the major averages have declined and it's been lower by nearly 2 to 2.5% across the board for the most part on Wall Street. For the Asian markets, well, they've gotten off to a bit of a choppy start this morning. So just pretty much tracking the kind of moves as well that we've witnessed overnight. The GIFT Nifty there down about 12 points at 19,317. So Nikunj, given that you're talking about the kind of trade setup, what happened last week, what would be the position now? Does one shift the position on the index, given that it has been a lot of touch and go as well with a very critical 19,300 mark?
So you look at the Nifty setup. Let's say a month ago, the premium on the Nifty was 120 points. It's just come down to 5-6 points now. Similarly, with the Bank Nifty, the premium seems to be shifting down. So the temptation to cut longs and create shorts at the institutional level, I think, is there. Similarly, on Friday, you take Reliance out of the equation, the market actually was quite hollow. And we know that while FIs are selling, the ammunition what domestic institutional investors are sitting on, that also seems to be, reducing. So it's not a market where you would say that you want to be the buyer in the first fall. I think the markets will be testing, the real strength of the bulls in a sense really would be tested this week, because you are at the lower end, global cues have turned volatile, dollar index is rising. So I will not be surprised that the direction of the market remains slightly fragile. And what needs to be seen is that if benchmark indices, which is Nifty and the Sensex, if they correct, what really is going to happen to the broader market? So strategy, I think, is simple. You don't want to commit a lot of leverage longs. And I think if the downtrend becomes slightly more pronounced, then maybe you may get a few odd trades, at least on the short side also.
Okay, that's a view coming in terms of the overall market position. But let's move right on then and talk about the big news maker of this week and in particular for today. And that's Jio Financial Services. And before being hived off, if it was known, of course, as Reliance Strategic Investment, that is going to make its debut on Dalal Street today. Now, the stock's discovered price was about 261, but the kind of trends that we're seeing in the grey market, that does suggest that it could perhaps list at a higher level. 1.5 lakh crores nearly in terms of the overall market capitalization, and it will become the second largest NBFC in the country with the market cap that will be higher than several of the Nifty heavyweights, the likes of Britannia, Hero Moto and Grasim Industries. So Nikunj, this is very closely going to be tracked by the markets.
So there is this short-term angle and then there is a long-term angle. Now, the long term, which is 3 to 5 years plus, that I think would be a function of what institutional investors they decide. Up until now, if you look at the Jio Financial listing, so you got shares in proportion. So if you own Reliance, you got Jio Financials. But I expect that a lot of institutional investors may actually take a view that they do not want to own Reliance, but they want to own Jio Financials. So that adjustment, I think, really would be at play. Similarly, there would be a lot of institutional investors who may want to change their view on Jio Financials. So you will actually see some institutional adjustment. But the way I see the short term and the way I see the medium to slightly long term is that I expect that the institutional appetite for this business is going to be strong. This is a very unique business. It gives you a play on just about everything from NBFC to institutional broking to an AMC. It also is a play on technology and connectivity, and no other parallel is there, and that will continue to give this any kind of a unique premium. So medium to long term, a company from the house of Reliance, which has the bedrock is technology. It's run by folks who understand scale and has got a very unique advantage in terms of what they can do. Now comes the medium, now comes the short term. Now at the current market cap of 1.7 lakh crore, it's not entirely a stock which would be lapped up in the short term because there is no big price mismatch. And this business now needs to be scaled up. It needs to demonstrate its ability and agility, which I'm sure they would. So in the short term, barring the technical adjustment happening today, I think it's fairly priced. But for somebody who's got a 2 to 3 year kind of a time frame, I will not be surprised that for a lot of institutional investor, this may soon becoming this go-to must-have kind of a stock.
Also quite the historic one, right? The first listing from the Reliance stable in about 2 decades.
See, Reliance, if you talk about the MDA group, yes, Reliance.
In MDA group, of course.
Yeah, so if you talk about, 2 decades, I think less than that, because Reliance Petroleum also listed. So I think Reliance Petroleum was 2003 or 2004. You're right, actually almost 17, 18 years. So Aisha, this is not a business, this is a very unique in a sense is that this is not where you've gone to the capital market and you raise capital. This is a business in which the existing shareholders of Reliance have actually got the share for free. Yes. So that I think is the bonus which they should be delighted and excited about. My point is that there is a short term and there is a medium to long term. The short term at this kind of a market cap, the fact that this business has just got incubated, they'll have to reach scale and size. In the medium term, this is a business which is very uniquely positioned because of technology.
And in a competitive market.
Yes, but they have advantage of technology, reach, scale, size, understanding, and a great team and the Reliance brand. So it will be a very different business.
Yeah, because it's a broad range of services as well that they will be offering.
Yeah, broad range of services in a sector where growth, I think, is very large. Yeah. So they actually would be challenging a lot of incumbents and they would be disrupting a lot. And this is a business where you actually would see that the distribution model would change. So it's very hard for anybody to imagine that what this business could potentially look like. You know, when Jio was born, who thought that it will create such a large ecosystem? Yeah. And it was not about the cost. It is the ecosystem which they've created in terms of platform, connectivity, Netflix, OTT. That's the ecosystem which a Jio business was able to create. Both of Jios have been a decisive needle, swing moment for India. Yeah. Can this franchise do the same? I think in some businesses they will, but I don't know which ones right now, because looking at the ability, talent, platform, advantage, skill, and reach.
Yeah, and the pedigree running the show right there at Jio Financial Services. Okay. We will be tracking minute by minute details right from the Bombay Stock Exchange, where Jio Financial Services listing is going to take place today. But let's also throw focus on what's happening with the globe, because Asia is a little bit of a mixed picture. Actually, it's now perked up in the green as we speak. Just going to quickly bring up that for you in trade right now. Remember, China has actually cut their one-year loan prime rate, but has left the five-year rate unchanged. So it's a bit of a mixed bag across the Asian screen. China a little bit soft. We will bring up Hong Kong, because when we started off trade, that was a little bit in the red. And it continues to be so, down about 0.7%. The gift Nifty, though, is indicating a mildly positive start for us. Let me, on that note, take it across to Vinny and find out what the global commentary has been overnight. Vinny?
Good morning. Absolutely. Firstly, we have a commentary that has come in from Mohammad Al Arian, and one, he's highlighting on the important events. He had spoken last week also about the Jackson Hole event that is this Friday. So keeping an eye out on that one. Especially, in particularly, he wants to take note of the comments that will be coming in from the Fed Chair Powell in his remarks on Friday as well. Other than that, obviously, in terms of data points coming in from Europe, Japan and US as well. And, you know, just a few moments ago, he did tweet on the China's cut, which they've cut in terms of the one-year loan prime rate as well as held the five-year rate. Now, in terms of that, he's saying this China news remains a very is a reminder that, you know, old-fashioned stimulus measures are not something that is obvious and easy to go with the government, because there are a lot of issues that actually crop up in terms of the growth challenges for the country, comes with the debt problems as well, and that is becoming more systematic in nature. So let's keep an eye out on comments that are coming in on that front. Other than that, we have a comment that is coming from Peter Schiff as well, and he's highlighting in terms of the financial crisis, and he says that a lot of people think that financial crisis is over, but it is still bubbling under the surface, is what the highlight is coming in, as well as he says that it's a matter of time before the next phase of this financial crisis actually starts. So let's keep an eye out, and, you know, a warning coming in from him on that front as well. Lawrence Wright Summer also highlighting in terms of the China's economy that is finally hitting a wall, that he's saying, and he believes that China's export growth engine is stalled by the lack of global willingness to actually accept more in terms of its production, and its infrastructure and real estate sector still must work off in terms of the mass overbuilding of the recent years as well. So yes, you know, that is an important highlight on the China economy front, as well as, you know, what he's highlighting in terms of the American economy. He says that normally when, you know, high school kids in America actually start learning different languages or going for a foreign language is the time when you realize that the country's economy is peaking, and that's an analogy that he's given. So let's keep an eye out on all these comments coming in from global commentators.
Thanks very much, Vinny, for summing up all that global commentary. And of course, Jackson Hole will be closely eyed this week. But let's find out levels to track and individual stock ideas as we step into a fresh week of trade. We've got Kunal Bothra as well as Nooresh Mirani joining in on the show. And Kunal, let's start off with you and get in your take, because it was a lot of touch and go with that 19,300 mark in the last week. What's the sense that you're getting? How should one position themselves on the Nifty index?
Well, yeah, it was a crucial week for the index. We tested 19,300 many a times in the previous week. We managed to defend it for most part of the week, but I think on Friday we managed to just about give away by a few points on the 90,300 mark. But then I think more important was a lot of data points other than the 90,300 mark. The premium for the Nifty futures that dropped down. I think at one point we were almost at par with respect to the August futures, and August is a long series with respect to the expiry. Even the Bank Nifty futures or the premium for the Bank Nifty futures declined to almost 100 points or slightly below those levels at one point of the day on Friday. So that goes to show that the extent of short positions built into the indices is pretty much on a higher side than what we typically expect in a negative trend on the index. I would still believe that 90,300 still seems to be a strong pivot support for the index. So we'll wait out to see a confirmation of the close below 90,300 mark today to initiate a fresh short on the index.
Nooresh, what's looking like the weakest link? Would it be IT or would it be banks?
So as of now, it has been banks. If we look at the Bank Nifty, it has done much lower, has gone lower than the Nifty itself. We are back to the prices we were in December of last year on the Bank Nifty. And if you look at the heavyweights, what has happened, you look at HDFC Bank, we are at 1600, where it was almost a year back, a year and a half back also. You have Kotak Mahindra Bank, which has gone nowhere for the last 2.5 years. And even the stocks which made new all-time highs have come back to the previous all-time highs. So ICICI Bank, which is the largest weight, is back to that 940, 960 mark, which was the previous high and a big resistance. So most of the banks have either gone sideways for multiple years, or they are back to the same prices they were a few months back. So banks is the place where there has been a relative weakness, but we are getting into an important support zone. So something closer to 18,800, 19,000 equivalent of Nifty is already there on the bank Nifty. 43,300 remains that zone. Till the time we hold that, the trend remains positive and there is a good bounce back chance from here on. So Bank Nifty is at a place where there can be a decent bounce from here going forward.
Let's find out those stock-specific strategies as well from our chartists. And Kunal, what's looking good?
So I'll go with two buy calls. The first one is about Bharat Forge. Stock looks attractive at the 50, 70 mark where it's trading. It's forming a bullish flag pattern on the shorter term charts. And I think that's the more prominent pattern for the stock, and also showing signs of relative strength so far over the last 3 or 4 days of the with respect to the overall market. So suggest a buy at the target of 1000, stop loss at 940. And Dixon Tech is something which looks attractive. Again, the stock showed signs of strength on Friday, trading above its long term as well as the medium term moving averages. So would suggest a buy with 5000 as a target, stop loss at 45.75.
Right. Nooresh, what's on your stock-specific list?
So first one is a buy on HDFC Bank, a contrarian trade out here. The stock is back to that 1580 to 1600 mark, which is a strong support. Out here, this is where the stock had been in the first announcements, recently came for a rejig, etc. So expecting this to hold, so risk reward rate, stop loss at 1575, a minimum bounce back target of 1660. Second is a buy on Indian hotels. The stock has been on the lower end of the range of the last 3 months. 375, 380 on the downside, 400, 405 on the upside has been the range for the stock. The other hotel names like Lemon Tree gave a breakout on Friday. East India Hotels gave a breakout on Friday. So this becomes a risk reward buy, wherein it's a buy with a stop loss at 370 and a target price of 430 to start.
Right. Okay, let's talk about what the market opinion is on the fundamental side as well, and whether or not there is a case to now look at beaten down IT stocks. Hear out what Nilesh Shah from Envision Capital and Hiren Ved from Alchemy have to say about the sector.
I'm not as bearish on tech as most people are. Yes, we are going through a slowdown patch, but my sense is that AI will actually accelerate tech spending. I think that every company will have to adapt AI into their processes, and they will need products and tools and Indian IT services companies to help them to use that AI into their businesses, right?
Currently, one company that we've just recently invested in, we own it, is essentially MapMyIndia C Info Systems, which went public, I think, a year and a half back. I think so again, coming back to technology, I still think that there are several opportunities in the broader market. I think if you take your eyes off the top 3, 4, 5 names and look at maybe some of the other companies, I think there are interesting opportunities. LTTS is something which we continue to own. Newgen is something that we have liked, and I think it's a very interesting company also.
Yes, we have NBFCs and financials at the top, but we also have consumer companies like United Spirits is part of my top 5. Varun Beverages are top 5. We don't look like the index at all in our top 5-10. We are bullish on Paytm and Zomato. We also like Policy Bazaar. Zomato could compound top line for the next couple of years, and if they start becoming more profitable than what they are today, then I think that's where the money is going to be made.
I think if they continue to do what they do currently, I think they have a great chance of being an outstanding bank. The big lever which they have is the cost to income ratio. For IDFC First Bank, it's at 70 to 75%. If over the next 5 to 10 years, if they can basically bring down that 70-75% to 40-45% and keep growing the loan book at maybe just about 20%, that can translate into some really nice compounding earnings growth for a long period of time.
Welcome back. Still tuned into the market. Now, several stocks are going to be in focus on the back of the FTSE rejig. Let's take it across to Somit to find out which ones they are. Somit?
Well, FTSE had announced its changes as we were expecting. Now there were some fresh inclusions and some changes from migrations from, in fact, all cap to the all world index, and this adjustment for these changes will happen on September 15. Now AIA Engineering is one stock that we need to keep an eye out for, because that has moved from all cap to all world, because of which there could be an inflow of close to $31 million, which is nearly 7.4 times its average daily volume. Now Syngene is a surprise here. It was expected to see increase in weightage, but it has actually been moved to all world from all cap index, and because of which there could be an inflow of close to $20 million, which is nearly 2.3 times its 20-day average volume. Now there's one negative news coming in here for KP IT Tech, because that was one stock that was expected to move to all world, but that is not happening here. But other than that, there are a host of other mid-cap companies like Tamil Nadu Mercantile Bank, Capri Global, Safari Industries, Data Patterns, NMDC Steel, Usha Martin, Railroad Children's, RK Forging and JVM Auto. All these stocks have been included in the all cap index of FTSE, because of which there could be some inflows in the range of around $10 million, and these the volumes that we could see in these stocks would be more than 1.5 times that daily average volume. Other than that, there's Hudson Agro and Brookfield REIT, which have been removed from the index, because of which there could be an outflow in the range of around $7 to $11 million, and HDFC Bank would be the key to watch out here, because that stock will see an inflow of close to $500 million because of the merger completion. The weightage has now increased in the FTSE index, and this $500 million is nearly 1.3 times their average daily volume. And lastly, there's Kotak Mahindra Bank, which could see an inflow of close to $65 million, which is nearly 0.7 times its average daily volume.
Right. Samit, since we have you with us, what about Gujarat Gas? That's also going to be in focus, right? Considering the gas prices in the Morbi region were increased.
Well, for the first time since October 2022 till now, the company has increased the prices of gas in the Morbi region. Now they have increased the prices by around 2 rupees per SCM, and this price hike has been done to pass on the rise that we had seen in the spot gas prices. Now from August 16, that is when the new gas price contracts were announced, the gas prices were increased to around $14.7 per MMBTU from $11 that we had seen previously. So to pass on this rise in gas prices, Gujarat Gas has gone ahead and increased the prices of gas in the Morbi region by around 2 rupees per SCM. Now post this price increase, if you see, the gas will become expensive in the Morbi region by around 6 rupees per SCM as compared to propane, which is the competing fuel. However, given the fact that propane prices will be increased from the month of September, this premium of gas as compared to propane would come down to 1 rupees from 6 rupees that we will see currently for the initial few days. Now, if you see, the last week the volume split was in favor of propane, with around propane getting around 4.2 MMSCMD of gas, while MMSCMD of demand, while gas had a demand of only 3.7 MMSCMD. So this could still remain in favor of propane, given the fact that propane still looks to be cheaper even for the next month, that is September 2023. Now this price hike taken by Gujarat Gas, what does that indicate? It indicates that the company is again changing their strategy. Now in the previous call they had clearly mentioned that their strategy will be volume focused, but now given that they have passed on the increase in gas prices, they are now trying to keep a balance between volume and profitability. Now do remember, in the first quarter of FY24, Gujarat Gas gross margin stood at close to 8.3 rupees per SM, which was the lowest in the last 6 quarters for the company.
We'll be watching out for Gujarat Gas and Trade. Swami, thanks very much for filling us in with all those details. Meantime, the spotlight will also be on PFC and REC in trade today. Both stocks are climbing on back of gains on a year-to-date basis. But it's interesting to understand what have been the triggers for these stocks. We've got Vamakshi here, who joins in with an in-depth analysis. Vamakshi?
Well, yes, when we look at PFC and REC, both these stocks are perched near their all-time high levels. When you look at the stock performance, yes, PFC is up nearly 90% on a year-to-date basis. And in fact, this is the biggest gain that the company has posted in the first 8 months of the year since its listing. REC is up over 101% on a year-to-date basis. And in fact, this is also the biggest gain that the company has posted in the first 8 months of the year since 2009. Now, as far as some of the triggers are concerned, macro stability, Government of India's thrust, as well as the strength strengthening balance sheet of power value chains participants are presenting a robust lending opportunity. In fact, brokerages are also highlighting that the planned power sector capex could create a financing opportunity of almost 98,000 crores by FY30, and they believe that both these counters, PFC as well as REC, are well positioned to capitalize on this opportunity. Their loan mix is also changing now. They are focusing on renewable energy as well as the non-power portfolio, and both these companies boast of healthy dividend payout. Now, particularly when PFC is concerned, they are expecting resolution of few projects to come in FY24, and currently nearly 85% of their total stressed assets are being resolved under the NCLT. Yields are also expected to improve for PFC, and that is what the company has highlighted very recently. REC, on the other hand, in a recent con call, they highlighted that they are targeting to be net zero NPA by the end of 2025. They have not added any new NPAs for the last 6 quarters, and in fact, the NIMs are also expected to improve for these for REC to almost 3.5% for FY24. Now, in the past, there have been concerns with regard to the asset quality for both these counters, but that is now changing. REC is seeing a gradual improvement. In fact, the GNPA was at its peak in FY19 at 7.24%, and it has now dropped to the lows of almost 3.42% in FY23. Now, as far as PFC is concerned, GNPA is at 3.9% for FY25, which is at a 6-year low, with asset resolution of nearly 17,100 odd crores seen between FY20 to FY30. Not just that, the valuations also look quite supportive for both these counters. In fact, analysts are highlighting that the valuations do not fully price in strong growth as well as sustainable, healthy asset quality prospects. So, all in all, on the back of this, watch out for PFC as well as REC.
Much, Vamakshi. So putting into perspective all the details as well as the overall valuation picture for tracking those gains on PFC and REC. But moving on then, some of the other stocks that will be in the spotlight in today's trade include data patterns. Why is that and what are the others? We've got Lisa here to walk us through the details of just that. Lisa?
Right, so InCred Equities, they met up with the data patterns, and the management has provided the guidance and outlook going forward for the company. So here are the important takeaways. The management is focusing on increasing the total addressable market of the company, and this will be by increasing their product portfolio. The strategy also will be by actively pursuing the prospects and contracts worth 2,000 to 3,000 crore over the next 3 to 4 years. On the guidance, the management said that they are aiming for a 30% growth in the top line as well as margins. They will be targeting 35 to 40% going forward, and for this they will be doubling up the manufacturing space as well as infrastructure. Also note that in December 2022, the company had raised a QIP worth rupees 500 crore, and the management said that this will be used for developing the product portfolio going forward, and they also added that there are no plans for further raising of the capital. So so data patterns will be in focus on the back of the management meet.
Right, Lisa, we'll leave it at that. And staying with management meets, let's shift focus to some pharma names as well that will be on our radar today on the back of that investor conference over the weekend. Sharath is here to get us all the details on that one.
Well, yes, in focus we are having Cipla, and over there in the management conference they have stated that the base erosion is largely flat as compared to almost 7 to 10% built-in guidance. Apart from this, also commentary coming in for the key drug albuterol, where the market share has stabilized at 12% and the peak levels was at almost 18%. Now, of course, some of the new launches were impacted because of the issues in the plant at the Indore as well as the Goa facilities. However, they are also very bullish, especially on the peptide launches which are expected to happen next year. Now, looking at for Sun Pharma itself, important commentary coming in, and they are confident of growth. So the Ilumya product in the US and ex-US the markets will be complementing the overall product portfolio. Apart from this, also the company is expecting that the supply from the Mohali plant is expected to normalize in the coming quarters as well. And lastly, the companies have also stated that they have benefited due to the disruptions coming in, but the Sun Pharma, the company itself, hasn't done that. Apart from this, also the company is not seeing any structural change coming in the generic macro, as the buyers have remained consolidated and still there is unutilized capacities. Lastly, Dr. Reddy's would be in focus, and strong commentary coming in for US market conditions because there is an improvement happening in these markets, and the price erosion still continues, but the intensity that has lowered, and that is very important for the pharma stocks. And currently the company itself is having levers to maintain a 25% operating margins without the Revlimid drug.
Thanks very much, Sharad. Those are a whole host of stocks to watch out for. Let's connect with Sandeep Sabharwal to find out his views on the markets as well as stock-specific ideas. Sandeep, hi there. Good morning. I guess today I'm going to start off by talking about Jio Financial Services making its D Street debut. And given the fact that it's going to be the second largest NBFC, the fact that it is going to provide services across the board in the financial services space, what exactly is your take?
The Jio Financial comes into a highly competitive space with established players, both on the banking side, which obviously, and the NBFC side. So I think it's not like a duopoly kind of industry of telecom, etc., which was very capex intensive, and they came in at a time when they could capture huge opportunities. So I think still they will be able to do well because the financial inclusion still has to grow, and overall credit demand. So overall, India still continues to be a credit-starved economy. But I think the value of the company is in terms of the market capitalization, not the business, because there is no business per se to speak of. So I think we'll have to give it time, and the discovered price was, as it is, much higher than what was being initially estimated. So near-term upsides are very tough to see.
Right, just looking at some of the other stocks which are going to be in focus, of course, all eyes are going to be what really transpires and comes out of that listing. That said, Sandeep, what about the overall market? You know, fresh China concerns, some of the lending rates getting cut there, noises from US not all that okay. And for us as well, food inflation doesn't seem to be ebbing off. And now there is that export duty on onions as well. So after tomato, it seems like onion prices are going to skyrocket. Do you think the markets are going to stall here for a bit?
Yeah, markets have been stalled and they've been facing the headwinds, both global and domestic. Global have been more to do with the US dollar index rise as well as the bond yields moving up. And China concerns, like you rightly said. So they are cutting lending rates by 10 basis points, etc., is not going to move the needle much. So I think there are some secular issues which will take many years to resolve, which is not necessarily bad for rest of the world, as it keeps the overall inflation and the inflation dynamics in control as China demand remains subdued. India specific food inflation is something which we shouldn't build too much of concern around, because I think it's more seasonal, and as we go into the winter, etc., all these vegetable prices, it has come down. But given the fact that markets have had a very sharp rally since March, not only in India, globally, so we are seeing some consolidation correction which could go on for a few more weeks before we set up the festival season for the start of possibly some new rallies.
Be the other stock which is going to be in focus. Let's just bring up that stock price up for you. Remember, they've acquired that additional 27.18% stake of the shares in Carrot Lane, and it's a sizable sum, 4,620 crore rupees. So they're going to increase the stake in the company from the earlier 71.1% to now 98.3%. And the transaction is going to get completed by October end, as we understand. Couple of brokerages as well which have come out with their notes on this particular stake buy. And CLSA, they maintain their outperform target price of 32.70 on Titan. They're saying that the move only highlights the focus of the company on building Carrot Lane as an integral component of its jewelry segment, and it's not going to have any material impact on their earnings. And they're looking to only enhance the reach via the Carrot Lane buy. Sandeep, wanted your thoughts in on Titan, because that's been a little bit of a struggle on the stock.
Yeah, near-term growth was subdued, and post results we saw some correction, but I think the stock has hardly corrected actually. And this buy is more of them buying their own company. So whatever valuation they want to buy at, there's no competitor as such. So there's no market price for this buy. So they must have done some independent evaluation and bought it. I don't think we should read too much into it. But I think what markets also underappreciate is the growing challenge which the entire diamond market faces due to lab-grown diamonds and the value erosion which could happen. So I think most of the analysts have no idea of what's happening, and I think that could be a challenge for many of the jewelry companies in terms of their profitability going into the next 2-3 years.
I'm going to just shift gears and talk about the power space. That's been one big charged up space. And Kunal, how much move for power stocks to go higher? 220 volt has become 440. And anything above 440, that danger sign is always out. No, dekha hai na wala. Are power stocks reaching that danger sign now?
No, not yet. I think if you're talking of REC, PFC, etc., I think
power, NTPC, Tata Power.
No ways. I mean, these stocks are so Tata Power has not performed only in this last 6-8 months. I think it's still at 250. That high for the stock, if I'm not wrong, was 250. It's come back towards 220, 230 mark. So it's still struggling as such from where it was maybe in 2020 second half or 21 second half for Tata Power, where the stock was I think at 60 rupees, moved up to 280, 290. Those levels, and the last 1 or 2 years the stock has been more sideways. I think NTPC is just getting started. This is a dream run for a stock like NTPC. The beta has changed. The stock has shown a lot of consistency. You've seen volumes for NTPC being a lot more stronger than what it has been earlier. And I'm talking of the last maybe 7, 8, 10 years for a stock like NTPC. Power Grid has also managed to give a strong breakout. And even the power finance stocks, for example, which I was talking about, REC, PFC, even these stocks have done exceptionally well. So this seems to be a very strong move where I think it's been led more by NTPC. So I'd be more bullish on NTPC from current levels than maybe a Tata Power or such other names.
Sandeep, not just the fundamentals of the power sector, but it's been attracting a lot of FII money as well, right? We saw GQG in Adani Power. You had a JSW Energy block as well. What are you making of the prospects of the power sector?
Yeah, the FII interest is from one fund only. So I think the second buy also was by that same fund. So I don't buy the power sector as such. The equipment suppliers or the people, ancillary companies, transmission towers, etc., all those companies I find to be a better bet because the capex intensity in power is very high, and then it tends to get into political interference, free power issues, issues of getting money back from the distribution segment periodically every few years. So it's tough for this segment, I believe, to generate sustainable wealth. And let's see how it goes. But I am not investing in this sector.
That's the view coming in, but let's move on then and put the spotlight on stocks on the editor's radar. M&M Finance and Chola Investments. And Nikunj, if we just go by the kind of Q1 net interest margins that they delivered, and what Morgan Stanley's latest note had to say is that there is going to be downside pressure on the loan yields.
Well, we picked up these stocks purely based on the Morgan Stanley report. And again, post Mahindra & Mahindra Financials, now Chola, they have the same thing, that it's a tactical idea where they expect the stock to underperform in the near term. That typically means that Morgan Stanley feels that there is going to be more selling and the flows in the short term are going to be moving away from NBFCs, and especially for Chola as well as Mahindra & Mahindra Financials. But what's the underlying thought here, Avan? The underlying thought here is that interest rates are not going to come down in a hurry. When interest rates, they go higher, banks always do well. When interest rates, they peak out, if the underlying credit demand and if the credit standards are strong, then NBFCs, they tend to outperform. I think we've seen that move already, let's say from June to August, where most of the NBFC stocks have skyrocketed. But whether it is tomato prices or whether it is onion prices, inflation ain't coming down. If inflation ain't coming down, interest rates are not going to come down. And typically that's the time these stocks, they will start underperforming. So look at how the movement really has been for some of these stocks here. Right up there when markets got a sense the interest rates have peaked out, these stocks started outperforming. Here interest rates is not going to peak out, inflation is back. These stocks, they tend to underperform. Be they expensive. Very, very expensive by any kind of yardstick. For Chola, it's CV. For Mahindra & Mahindra Financials, I think it's a rural economy. Both these triggers have been played out. So I will not be surprised that after the recent run-up, because of what the opinion from Morgan Stanley is, and given where the valuation and interest rate dynamics are, these stocks may actually underperform in the short term. That does not mean you short them, but these are stocks where you should not participate, at least in a decline.
It would be interesting as well, Aisha, to find out what our experts make, but that's the editor's take. No upside triggers for now.
Yeah, that's the take coming in on both those stocks, M&M Finance as well as Chola. Let's just take a look at what ITC as well has been up to in trade. And an interesting note as well coming in there. Just going to bring that up for you as well on your screens. And, Sandeep, wanted to get your thoughts in on ITC. With all the positive news flow around, the earnings being good, the hotel demerger, etc. But do you think from the current levels, the upside in the near term at least could get capped for ITC?
Yeah, the upside is limited because ITC has been a stark outperformer in the overall FMCG segment where the rest of the stocks have not done anything great. So there's been a significant re-rating upwards driven by improved performance of the FMCG business, sustainable performance in cigarettes, and good performance coming from hotels, paper segments, etc. But I think a large part of that is captured into the valuations, and the demerger of the hotel business also did not go as per what the investors thought it would. So I think that also created some sort of a little bit downside in the stock. Overall, it's fairly valued at this stage. Further growth triggers for ITC could come in terms of further improved profitability in the FMCG segment and progress on hotel demerger. It could take some time. So I would agree with you that near term the upside looks capped.
Okay, I'm just going to focus on the metal space here. And Sandeep, markets, I don't know why, but they tend to always get excited that China ke achhe din aane wale hain. And when that happens, metal stocks, they start rallying. And then markets realize that, that's a huge economy which is going to go under its own, it's going under its own weight. The interest rate and growth dynamics are not favorable at all. What should one do with metal stocks in general when the China star trade has got diluted and the dollar index has started moving higher? Are metals an avoid?
Yeah, metals are completely an avoid. So metals, chemicals, specialty chemicals. So I think there are several segments which are very fancied by traders and short-term investors and a set of people. These are complete avoids. I think because prices are not going to move up. In fact, metals, we've still seen a correction, and stocks will actually remain more stable rather than fall too much. But all these specialty chemical segment, I think there we could still see much sharper corrections because the margins are going to fall very, very drastically out there.
Nooresh, comment on metal stocks, because we've discussed them in the past, and last week it appeared that the metal stocks in a sense were getting, gaining weight for a breakout. But breakout has failed, now it is a breakdown.
It's almost been a year and a half the leadership is gone. Since the time they topped out, we've seen only temporary moves, a bounce back of 10-15% in majority of the earlier leaders. So Tata Steel, Steel Authority of India Limited, Nalco, many of these names have just seen temporary moves. The sustainable moves have been only in Jindal Steel and JSW Steel in terms of an outperformance. But one thing which everyone has missed out is the fact that the next leg of metals, which is 2 steps higher, Jindal Stainless has done really well. On mining side, Godavari Power, Sarda Energy. Even in terms of steel-based auto ancillaries or a mix of it, has done really well, a Sunflag Iron. And many of these companies are doing well. So one has to take a step beyond the known metal names. For example, NMDC now has done bad, but relatively looks interesting. So mining could be more interesting than the pure play metals. So my view is, if I have to go into metals, I'll only be looking at the relative outperformers like Jindal Steel and JSW Steel. The rest of the names will take a long time. And we've seen this over cycles again and again. They have a cycle, and after that they are sideways. They see temporary moves for multiple years as well. So there's no point looking at it. We played the cycle a couple of years back, and now time to focus on the next side of it, which is where we are seeing the mid cap, small cap, and the 2 levels higher of say metals in terms of processing. Those names are doing really well. So that is where the focus is.
Yeah, those have been some of the buzzing financials, right? Kunal, AU Bank, MFSL, that's where the traction was on Friday too.
Yeah, but I think most of these stocks, for example, Small Finance Bank, I think that has been a huge underperformer. I think if I'm not wrong, for the last 2 years, the stock is stuck into this range of 670 and then 770, 750 mark for itself. There have been movements above and below those levels, but with a very thin kind of a margin, the stock tends to just come back into the 700 league and then tends to remain sideways. So it really needs a big jolt of a breakout above that maybe 800 round figure mark for the stock to try and end this multi-month, multi-quarter, multi-year consolidation for itself. Even for MFSL, I think the stock has shown periodic signs of uptrend. There have been good volume bursts for the stock price, but then the long-term trend for the stock has been a bit more staggered. So I'll be looking out to wait out for a decent correction to these stocks. Maybe a retracement towards a 50-day moving average could be a good sign. But for Small Finance Bank specifically, I think the stock should be traded only above 800 mark.
Sandeep, what will happen to NBFCs? I mean, interest rates are not going to come down in a hurry. And typically, when interest rates do not come down in a hurry and inflation remains elevated, wholesale borrowing cost will not come down. The 10-year yields have already gone higher. Do you think after months and months of outperformance, NBFCs could underperform and time to switch out of NBFCs?
A near-term underperformance could be a reality given the fact that, like you rightly said, that margins get squeezed when wholesale borrowing costs remain higher for a longer time as more and more of the liabilities get repriced. So I think that's a phenomenon which could continue in the near term. They still have growth potential now. The challenge for them and what investors need to watch out will be NPA trends and whether there is any deterioration in that. So if that doesn't happen, I think after some time, these stocks could again start performing, and to that extent, some of the better NBFCs could become a buy. And so I think that's the important parameter I would watch out for.
Mahindra Financials down 2%, Cholamandal. Some of these stocks are still up 35-40%. Nooresh, since we are talking about a slow grind on the index, and we are talking about perhaps some volatility and downside in small and mid-cap stocks, which to your mind is the Humpty Dumpty group, Nooresh, which could underperform or which could crack?
So that's been a tough one because we've seen names go through rotations. We've not seen one sector do only well. So that is where the problem is. Say, earlier, whenever we created a short-term top, there would be only one sector doing well, and the rest of them not doing well. And that sector, you could say, it has overdone the move. But if we see, we've had one sector do well, then the next one, then the next one. For example, banks did nothing for the initial recovery of COVID, but they did well in 2022-23. So out here, it's a tough one. The only space which seems a little overrated is the EMS space, which is where we've seen moves across the names in a one-way manner. And the number of initiation reports which have come is the highest on a single sector, which generally doesn't happen. So that's the only sector which has seen over participation in the last 1 to 2 months. Then maybe one could look at, say, a PFC, REC, which have seen the maximum move. But then you look at the 10-15 years, it has done nothing. So that's a tough call to take. But the only space which comes out with too much action, too much of, say, talk going on is EMS. So that could see a short-term correction.
Question for you, which is the Humpty Dumpty group in this market? Sandeep?
Yeah.
Which is the Humpty Dumpty group in this market according to you? I know Swan is big, you don't remember Humpty Dumpty now. But yes, Humpty Dumpty does happen in the market.
So I think the avoid spaces clearly are like what we already discussed, the metals as well as chemicals, specialty chemicals. So all these spaces are the avoids. And X of that, I think we'll see somewhat more correction in many of the other sectors. But so I expect markets to remain weak or sideways for some time, but I don't expect a big crash coming in. So that's my overall view.
Couple of other names which are going to be in focus as well. And, we've been talking about what's really transpiring with inflation. And I think one key stock or rather one key segment is going to be all these commodity consumer companies. I mean, look at Mrs. Bector, for instance. You know, we were just stacking up as to how Mrs. Bector has been one of the most stupendous performers of this year, perhaps, be it the one-year return or, for that matter, the one-month return as well on Mrs. Bector. I'm just going to dig out that data up for you and show you how these stocks have actually performed, because it's been, a great performance. 1 month return of 27%, 3 month of 63%, and 1 year return of 198%. But Sandeep, what happens to some of these agri-consumers now with wheat prices at a 6-month high, all the concerns around tomato, onion prices and what have you?
So I don't think they consume tomato, onion and all, but wheat and other inputs obviously will impact them. So this is a company I've been tracking for some time, like attending on call, etc. And I like what they have done, but unfortunately the stock has not given any entry, so it's not corrected at all. So I think it's a company which has done very well. Near term now the valuations are very, very high. So the concern is valuation issues rather than overall what they've been doing as a strategy. And if the spike in input prices creates a decent even enough correction, then we could look at buying into it at some stage.
Just get in your thoughts as well as to what the outlook is when it comes to the defense space, given the kind of opportunities that the sector is going to harness with the government's thrust on this space. Is there still more leg room for upside within defense? Are you being selective here?
So defense, we have to be selective because of the fact that the stocks have run up a lot, and like what Nooresh was discussing about the most over talked of sector in the near term, that's defense and defense related stocks. So I think when markets enter into a weak range, some of these stocks could also end up giving up decent gains. So I think we should be careful near term overall and try to look for better entry opportunities instead of buying at 52-week highs or all-time highs.
Okay, Sandeep, great to have you on the show. We'll let you go on that note. You have a good day. Let's just revisit what the GIFT Nifty is indicating, because it was starting absolutely flat. And I don't think it has changed much from there. Still pretty quiet in trade. But a couple of stocks that we've been highlighting, and Titan surely is going to be the one in focus, given that they've upped the stake in Carrot Lane now. So let's welcome on board Amnish Agarwal and understand what he's making of this move of Titan. Amnish, hi, good morning. Great to have you. Thanks for joining in today. Wanted to understand how you're looking at Titan's move. I mean, it clearly enhances their reach, right?
You see, Titan already, good morning. Titan already had 71% stake in Carrot Lane. So technically, Carrot Lane was a subsidiary of Titan. Now, as was expected, Titan gradually had intention to increase the stake to, say, 100% and make it a fully owned subsidiary. And this move, I think, will give them more operational freedom, and they can now, you can say, decide more on the future of the Carrot Lane and their, you can say, policies and the way they want to, you can say, take this company forward. But from the, I would say, P&L and balance sheet point of view, I think it is not going to be anything which is significantly accretive in the near term.
Amnish, one of the reasons why Titan has always commanded this premium is because it's been a high return and zero debt company. But because of this acquisition, they will have to acquire debt. Do you think in the near term that could lead to earnings downgrade? It could be temporary, but automatically it will happen.
Okay. So as per our calculation, I think on 31st of March, they were having, say, investments, cash and all to the extent of, say, 2,500, 3,000 crores. So I don't rule out that Titan might be required to take a debt of, say, a couple of thousand crores initially. But given the fact that Titan is having fairly strong, you can say, profitability, and we are expecting Titan to generate a profit of more than 8,000 crores over the coming 2 years. So I think even if debt comes on the balance sheet of Titan, I think it will be a very, very temporary phenomenon. And maybe in another year or so, the debt will be off the balance sheet of the company. So in the near term, yes, there could be an EPS impact. Purely if you look at the standalone numbers of, say, anywhere ranging from 1.5 to 3%. However, it doesn't, you can say, change the SOTP targets because now you will be taking consolidating 98% for CaratLane.
With the potential upside for CaratLane, I mean, it's almost like a 3,000 crore brand now. What potentially it could be now that Titan is the majority owner?
See, Nikunj, as I stated, that it opens a lot of opportunity and gives complete freedom to the management of Titan to explore, you can say, various options with regards to leveraging the distribution, brand, and other things. CaratLane is a very strong omni-channel brand, more so in the lightweight jewelry. You can say in the studded jewelry, which is usually the one which lot of, you can say, the younger generation prefers. So in terms of growth, I think the opportunities are immense. I don't rule out that over the next 3 years, the company doubles the top lines from here and also improves the profitability. However, more details we will come to know as we go along, and it depends how you can say, the company integrates the operations further.
Your price target both on the upside or on the downside because of this additional stake buyout by Titan. Can I infer that?
You see, the upside in terms of, say, earlier we were factoring in, say, around 75 rupees per share for CaratLane. So that amount is going to go up, maybe say 125, 130 rupees or so. So in terms of upside, in the overall SOTP of the company, it might add, say, 50, 60 rupees, not beyond that. In terms of downside, I don't see any major downside coming to Titan because of this acquisition.
Wanted to get in your thoughts on the overall valuations as well at about 16,900 odd crores for CaratLane. Do you think that that's a fair price for a long-term perspective, given the fact that you are seeing faster growth and it is already profitable?
You see, if you look at the near term, then one can infer that it looks expensive because for 27% stake, 4,600 is it's not cheaper by any stretch of imagination. But having said that, Titan has been virtually running the company from quite some time. That is one. The second thing is that this amount includes a lot of control premium which they would have paid to the erstwhile promoters to get their entire stake. And usually that is why this amount which has been paid, which can be looked at primarily from the viewpoint of, say, if you look at EV by sales or any other parameter. And I think the way this company has been growing, if you look at, say, next 3 to 5 years viewpoint, then at that point of time, it might not
Thank you, Amnish, for joining in and sharing with us your outlook and thoughts on the future of the business, what the acquisition means, and the outlook for Titan as a stock as well. In fact, let's get in some chart checks going too, and a view, Nooresh, from you on the charts of something like a Bajaj Consumer, Aircon International, as well as Page Industries. Those were some of the stocks that declined on Friday's trading day.
Consumer has made a strong move over the last few months from 180 to 200 levels where it broke out. The stock went to 250, and that is where 250 odd levels. So that's a strong move over the last few months. So a little bit of a correction, but the trend remains same. The trend still remains up. A dips to 220, 230 would still be a buying opportunity on the stock. Could see a little bit more of a dip to that band of 220, 230. Going into Aircon. Similar to the other railway names, the stock has done really well from 50, 60 levels to 105 in the last 4 or 5 months. So a little bit of a correction here also, but the trend is still positive. So any retest of the last breakout of 90, 95 zone is a buying opportunity. Page, on the other hand, is making a bottoming out formation. So out here, it could spend a lot more time being sideways. It has made 3 bottoms around the 36,000 mark. The last gap down got covered and got resistance around that area only from the last quarterly results. So I would expect some more sideways correction between 36,000 to 42,000 for many, many months to go. So not looking at Page Industries, but the other 2 names could be interesting on a sharper dip.
I want to look at Kochi Shipyard. I want to look at just about Mazgaon Shipyard. Now it's defense, but within defense, it is the shipyard companies which have done last 1 week actually. 30%, Kunal? Hello? 30%. Why?
Not sure why.
I don't know the why. That's what I'm asking you.
No. So
30 more? That's the question.
7 days, 30%. I don't know what's changed. I mean, I don't remember any big order which has come actually. Cochin Shipyard. Now, similarly, you look at even Mazgaon Shipyard. Aren't these stocks now not overbought, but extremely overbought? Aren't we reaching that zone in these markets where everybody wants to just buy them?
Exactly. So I think the point is that everyone wants to buy these stocks because they are, in their extreme prime as such in terms of price performance. And, this is where traders, they are generally left out with buying stocks, even though they may be good quality stocks, but then, buying these stocks at extremely high value, high price for themselves. And, such kind of 30% up move for these stocks is typically not an entry, a very good entry point. In fact, we ideally wait out for a decent correction into these stocks, a major time-wise correction, or in many cases when the price action is a bit more hurried, we look out for major price corrections for these stocks. I would agree with the same. I think this is not a good time to buy these stocks, even though the price trends near term, short term look very attractive. You have to wait for a sizable correction, at least a 15 to 20% correction to start off with should be a decent way to buy these stocks.
There was no trigger, Nikunj, as such, but at least when it comes to the financials, they did live up to the mark. You had a Cochin shipyard, for instance, more than doubling their net profits. Their overall operating performance as well has been fairly healthy, and brokerages are pretty bullish on Cochin. Yeah, so we'll have to see what
I think, Aman, my limited point is it like the peak prime form for them? It's like, is it the peak prime form for them where you actually would see that now next coming months and days, the stock either will move into a range bound session or with a downward bias. The other group, Kunal, Nooresh, is Adani. We've really stopped talking about them from a trader standpoint. Now, trader doesn't care about what the news flow is. The trader is interested in trend. What is the big trend for Adani group of stocks? Within that group, which is the strongest stock and which is a stock which is the weakest?
If you were to look at the strongest stock, how do we compare it to be the strongest? The one stock which actually has gone beyond the time when the whole fall started. So if you look at Adani Enterprises, most of the fall started from roughly closer to that 27th January mark, which is where Adani Enterprises was 3,400 rupees. Today it is at 2,600 rupees. But if you look at it, Adani Ports on that day was closer to 750 to 760 rupees. Today the stock is at 830 rupees. So clearly the one stock which has digested the whole problem and is much higher than that prices is Adani Port. So, and clearly that has always been the preference because that's been the stock where you have the highest institutional holding in the group. The next one, if you go to it in the Adani group, comes out to be say other name is Adani Enterprises, which has made a strong recovery. And if you would consider Ambuja Cements, that's the other one which has almost come back to the same prices. The stock was 500 rupees on 27 January. The stock came back to 480 and today is at 450. So it's very clear that these two names are the institutional favorites from the group. But the smaller names have now started making a breakout move. So for example, an Adani Power has seen a strong recovery. That is also back above the 27 Jan prices. The stock was at 280 then. The recent move in the last two sessions, the stock has come above those levels. So three names out of the whole group have clearly shown a resilience and are back above the prices from where the fall started. So if one has to focus, these are the names one should look at. There could be trading bounces in the other names like Adani Transmission, Adani Wilmar, purely because they've fallen a lot and they're still at the lower end of the range where the bottoms were made in Feb, March. But clear leadership is Adani Ports, Ambuja Cements and Adani Power.
Pre-open rates on your screens, and let's find out what the top mid-cap recommendations are from our chartists. And Kunal, what's your top mid-cap call?
Well, I'll go with the Oil India as a buy. Classical breakout on the short-term charts, a swing pattern breakout, a flag kind of a pattern for the stock on the daily charts, trading about 288 mark for itself. So would suggest a buy with a target of 308. Stop loss could be kept at 280.
Okay, Nooresh, what's on your radar?
So that would be a buy on EIH Hotels, East India Hotels. The stock is finally making a multi-year breakout. Also, yesterday hit a new 52-week high. The stock has come to 220, 225 levels. 220 was last seen in 2018 and in 2008. So the stock is very similarly placed to what Indian Hotels was a couple of years back. So very interesting breakout seen here. If this continues, it could surprise on the upside. A huge cup and handle, a huge range breakout of the last 15 years plus. So out here, an initial target price of 260 to start with, stop loss at 215.
A little bit trivia here. Actually, one of the largest shareholder of EIH is actually Reliance Group. EIH is East India Hotels, and they own one of the most luxurious hospitality brand in the world. That's Oberoi Hotels, and they were some of the best properties, at least in Delhi, Udaipur, Jaipur. Really, I mean, in terms of class apart when it comes to luxury hospitality. But Jio Financial Services, the price discovery. Let's understand what could be in store. It's a company from the house of Reliance, but it's a business which has a very strong growth highway. Unlike other Reliance companies, this is a free listing, which is this existing shareholders of Reliance, they've got the stock free. There are 2 or 3 ways in which you can look at the stock. What happens in the near term? I would say that in the near term, if you really look at the short term, at a market cap of 1 lakh to 1.7 to 1.8 lakh crore, at best the stock is reasonably priced because they are still incubating the business, and any business at that scale and size will take 2 or 3 years before it will get incubated. However, I will not be surprised that more than retail appetite, there could be institutional appetite for the stock for folks who have a genuine 2 to 3 year time frame. Why 2 to 3 year is important? Because within 2 to 3 years, given that Reliance has scale, reach, size, data, technology, platform, just about everything to create an ecosystem, they would be able to have some disruptive impact here. We've seen what Jio did. I mean, who would have thought that Jio, which would be a promise of fast and cheap bandwidth, would actually change the way how data is consumed in India, how the startup ecosystem would be born. Can this entire Jio Financial Services be disruptive enough to change the distribution business, the AMC business, the lending business? I don't know. But there is a possibility that they will do something very differentiated, because folks like KV Kamath who understand skill and size are in a sense really shepherding the business. That's one. Second, from a market standpoint, I think the price discovery is reasonable, but from an institutional and from a long haul standpoint, I think the excitement cannot be ruled out. I don't expect the stock is going to go to races after the price discovery, which was, by the way, much above than what everybody anticipated and expected. So a smart listing and then maybe some time-wise consolidation. But if you are in for 2 to 3 years and 3 year plus, bear that in mind, 2 to 3 year, minimum 2 to 3 years, then this really could be one of those stocks which should be part of your portfolio, given that the proposition I think is going to be very strong. That's my understanding of how this business is going to be stacked up going forward. But where is Reliance actually? Kunal, this stock did the trick for markets on Friday. I mean, imagine if Reliance was not there on Friday, the markets would have caved in.
Yeah, definitely, Nikunj. In fact, a 2.5% kind of an uptick for Reliance from the intraday lows, something which single-handedly, I think, lifted the move for the index, the Nifty specifically, where it recovered more than, I think, 100, 120 odd points at one point of time to close about the 90,300 mark. So I think the stock has played a very good role for itself. Now, what we need for Reliance is a breakout on 2 important fronts. One is a 3-day or a 4-day swing breakout, which is just about the 2,600 mark for Reliance Industries. I think once that gets taken out, we could be looking at the next set of to trigger on the upside, which is 2640, 2650 for Reliance, which was the previous high for the stock. Just I think on the day of that demerger for Jio Financial. So I think these are the 2 important levels which I'll be watching out for. But I think what's interesting about the stock is in the last 5-7 days, the stock has shown a lot of times a lot of resilience, a lot of comeback, and I think that's the flavor for Reliance Industries, where it tends to move up higher and it takes along the index along with the price movement on the upside.
All right, let's move right on then and revisit the stocks that are on the editor's radar. M&M Financial and Chola Investment on the spotlight.
Well, we picked up these stocks purely based on the Morgan Stanley report. And again, post Mahindra & Mahindra Financial, now Chola, they have the same thing, that it's a tactical idea where they expect the stock to underperform in the near term. That typically means that Morgan Stanley feels that there is going to be more selling and the flows in the short term are going to be moving away from NBFCs, and especially for Chola as well as Mahindra & Mahindra Financials. But what's the underlying thought here, Avan? The underlying thought here is that interest rates are not going to come down in a hurry. When interest rates they go higher, banks always do well. When interest rates they peak out, if the underlying credit demand and if the credit standards are strong, then NBFCs they tend to outperform. I think we've seen that move already, let's say from June to August, where most of the NBFC stocks have skyrocketed. But whether it is tomato prices or whether it is onion prices, inflation ain't coming down. If inflation ain't coming down, interest rates are not going to come down. And typically that's the time these stocks, they will start underperforming. So look at how the movement really has been for some of these stocks here. Right up there when markets got a sense the interest rates have peaked out, these stocks started outperforming. Here interest rates is not going to peak out, inflation is back. These stocks, they tend to underperform. Be they expensive. Very, very expensive by any kind of yardstick. For Chola, it's CV. For Mahindra and Mahindra Financials, I think it's a rural economy. Both these triggers have been played out. Yeah. So I will not be surprised that after the recent run-up, because of what the opinion from Morgan Stanley is, and given where the valuation and interest rate dynamics are, these stocks may actually underperform in the short term. That does not mean you short them, but these are stocks where you should not participate, at least in a decline.
Moving away from that, all eyes are on India's mega moon mission. That's Chandrayaan-3, which is set to be the first space mission to make a landing on the south pole of the moon. The Indian Space Agency has said that it will be landing on the moon on the 23rd of August. That's in 2 days, around 6:04 p.m. Meanwhile, do remember that Russia's lunar mission, that's Luna 25, crash landed on Sunday in a significant setback to the country. All right, let's move right back to the markets then. Just about a few minutes to go for the markets to open, and here are your index calls. It's a different opinion from three of our experts. Buy according to Kunal, no trade says Nooresh, and hold. That's the view that Santosh Meena has been maintaining for quite many days, and ditto when it comes to the Nifty Bank.
Okay, getting set for the market open then. Nooresh, since you were pretty gung-ho about Reliance, let's revisit the call there.
So Reliance Industries looks very interesting for the fact that before the Jio listing, the stock all-time high was 2850. A remove of 250 rupees for Jio as per the adjustment roughly being round of figures, 2600 remains that critical price point. For now, 2600, 2630 would be a resistance. If it can cross that, it would be a multi-year high. The stock has done nothing from the top in September 20. So out here, watching out for it to cross 2600, 2640. That is the shorter term target. But if that happens, you finally get a leadership stock in the Nifty. We have not seen any leadership stock for the last almost a month or so. So that's the reason Reliance looks interesting. 10% of the Nifty weight. So a good move here can actually propel the index as well. So for now, watching that 2600, 2630 mark. Positive on the stock. I would get much more positive about 2600, 2630.
All right, first rates any second now, and the first rates any second will just pop up on your screen. It's a big day because the price discovery for Jio Financial Services was done. Today it will be a function of really the institutional activity which could be at play, because institutional investors, I don't think they were active at least when the price discovery was on, because the price discovery in a sense was done in a very limited kind of an time frame. That's one. Second, Titan, again, it's a big acquisition what they've done. It may have an impact on the EPS in the short term, but markets are not really too bothered about it. And third, I guess it would be the whole China story, which in a sense could have an impact on the markets in the near term purely because pressure is coming back on some of the metal stocks. First rates are kicking in now. For the Nifty, for the Bank Nifty, the decline and the bias I think is down, which is important. The decline and the bias is down. Now bear in mind that Bank Nifty, the leadership index is down 5% from the high, and small and the mid cap stocks have not corrected. If you go below key levels on the Nifty, then what happens? I mean, then are we in for a sharpish reversal and a sell-off? That is something which may happen going forward. There are two stocks which were there on our radar: Cholamandalam Investment and Mahindra & Mahindra Finance, where Morgan Stanley feels that the short-term market volatility could make a comeback. No large newsmakers. Adani group of stocks, let's mark them, all of them actually, a lot of green there. Some of these stocks have made a very smart and a reasonable comeback also from the recent lows. Aisha?
Not much by way of newsmakers. Adani Ports, remember GQG has now upped their stake to 5.03 from the earlier 4.93% in lieu of the recent acquisition of another 22 lakh shares in the company. So 846 is where Adani Ports is currently. There's also PNB Housing. They recovered about 784 crore rupees. That's almost 1.3% of their loan assets from one of the corporate non-performing accounts. So that's the other one which is in focus. It's gapped up this morning, 7.5% on a tear for PNB Housing as we speak. Let's see what the Chola Group group of companies as well is up to, in particular Chola Finance, given that the Murugappa family has settled the legal dispute with Valli Arunachalam. That stock holding up 2.25% as we speak, although it should not really have a bearing on any of the listed entities. KC International, another order win worth about 1,007 odd crore rupees across various businesses. So that's another stock in focus. And Sobha Limited as well, wherein the promoter has released the pledge of 33 lakh shares as of August 17. That notification is in. Let's see what Titan is up to, whether it's having any pressure or any concern that the street may have. Not quite. It's pretty much a neutral event, just marginally higher for Titan as we speak at 30.55 odd rupees. There's Tanla platform as well, wherein the Vodafone Idea argument says that they won't be renewed agreement beyond the expiry of initial term in November. So that's the other stock in focus. And yes, Gujarat Gas, like what Somit was highlighting earlier, they've hiked the Morbi industrial gas prices to 40.83 SCM now from the earlier 38.43. So that stock holding up 1.25% as we speak right now. But let's also revisit some of the big buzzers from Friday. Besides the Adani names, there was MFSL, there was AU Bank, Ambuja Cement, ACC. There was Axis as well, which held out, and a sporadic few odd moves across the auto packs. So Aisha, Maruti were all in the green. And it's a pretty much lukewarm start. Kunal, which way you think it's going to head, and any rates that or rather trades that you're punching?
Yeah, again a tepid start for the index, but again 90,300 is something which we are holding on even after multiple attempts on an intraday basis. So let's hope this time around that 90,300 mark acts as a solid base and we move up higher slowly for the indices. In terms of opening trade, Bharat is something which looks attractive, formed a bullish flag pattern on the daily chart, so that's something which I'll look to trade in the open.
Right, Nooresh, the first trades that you're looking at?
So looking at a buy on dips on EIH, the stock has opened with a gap up, but closer to 225, 227 is where I would like to buy EIH for the day.